Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, thanks for joining us on the show. Appreciate you tuning in as we navigate property and property investment, and we're in an interesting market at the moment. Market in flux, and our flux being we have markets within markets, in the Sydney market and some segments of the Sydney market and the Melbourne market, and some segments of the Melbourne market slowing down, softening, however you want to call it. I'm not going to call it a crash. I don't even know what a crash is. I've asked a number of people over the years what a property crash is, and no one can actually give me any examples. To me, a crash is 20, 30, 40% coming off of prices. So I think it is a genuine softening, and we'll continue to see that for some period of time across those markets. But there's many markets right across Australia. Perth, as we all know, we've been talking about it for quite some time now on the Smart Property Investment Show, is still in the doldrums. There is some sprouts of growth that we're starting to see, but the sentiment that I'm hearing from people in the marketplace is you don't need to rush out there. Adelaide, South Australia, steady as you go. Brisbane, the same. But property investment's an interesting one because obviously the goal in property investment, by and large, to generalise, is to secure assets which are going to grow in time, grow in value over time, and hopefully not cost you too much to hold by generating a rental return. So every property investor is always thinking about valuations. What's my property worth? And that's on the basis if you're looking to refinance or sell down or realise some equity that you might have in that property. So valuation is key. In a softening market, often the valuations can throw a lot of people where the actual perceived value of the property is a lot less than what they think it would be, and that often puts people in some sort of stress. But we're going to have a chat about valuations today, why they're important, what's happening right now in the valuation space, how property is valued in a softening market, and how you can maybe change your mindset or your paradigm for how you view your properties, but also have a look at it within SMSFs as well. To help me out with this, I have Sally Dale. She's the State Director for New South Wales, ACT and Queensland for Opteon. Sally, how are you going?
Good, thank you. How are you, Phil?
Good. You love valuations.
I love it.
Why and how have you ended up being a property valuer?
I guess I've been a property valuer for 25 years, and I think as most students, you leave high school and you're sort of not sure what you want to do. I really wanted a job where I was out in the field, not stuck in an office all day, so hence I went and did the land economics degree. And been a valuer now for 25 years, and I've really enjoyed it. It's been a great career.
So people like property valuations when they're on the high side, but they hate property valuations on the low side. What sort of market are we in right now?
Yeah. Well, as you said, it is a varying market. A lot of different states, different markets. At Tassie, for example, that is actually really strong. The market there is strong. A lot of investors coming from overseas, so that market's great. As you said, in Victoria, the market's probably only just starting to see a slowdown probably in the last 3 to 6 months. Sydney, last 12 months has come off. Mind you, some of the lower end sectors, units, they're still going pretty well. Yeah. Prices haven't come back. It's probably more that middle market sector where we've seen prices come back 10 to 15%. Queensland, pretty steady. SA steady, as you said. WA's still down in the doldrums.
Yeah.
And NT as well, that's probably a tough market.
So how do you guys, and it's a big question, I guess, but how do you guys work out what a property's worth? Like what mechanisms do you use in order to say the value of this property is X?
Yep. Well, I mean, it depends. Generally, it's comparable sales. So we'll look at what else has sold in the market in recent times. I mean, residential property is probably a lot easier to value. We just look at the attributes, land size, the improvements, and then we'll make adjustments based on the comparability between the subject property and those sales. Commercial's different again. We'll look at the income streams, the costs associated with that property, land tax, rates. But generally, overall, we look at comparable sales to determine the value.
And so with the residential property, and that's what we're talking about today, it's pretty easy to compare apples with apples, mainly. There's not very often that you find something which is so unique you can't compare it to something which is just down the road.
Generally, 95% of the time it's pretty easy, especially in metro areas. upper end markets can be tricky because every property is different, but also in regional areas where there hasn't been a lot of sales, or you've got a property sort of in a remote location, that can get a lot more difficult. And that's where we need to draw on our experience, having been in the market for, a long time. Sometimes it is subjective valuation, so we've really got to use our knowledge and experience to come up with that figure.
And you guys have a lot of responsibility in that a bank giving a mortgage on a particular property will come to you and say, tell us how much this thing is worth and we'll lend against that valuation. There's a lot of risk involved with that as a valuer. You guys are typically on the conservative side, is that fair?
A lot of people think that, but I mean, we're looking at comparable sales. So I guess we're looking back in time. We're asked to look at the most recent sales. So we really want to get sales within the last 3 to 6 months. And we're only reporting what those sales show. But we're not a real estate agent. We're not there to try and sell your property. And, we all want the highest price. So when we hear someone say it's, worth $50,000 more than what someone else is saying, of course we're going to want to use the services of that person because we want to maximise our investment.
Yeah. And do you think most property investors get it wrong in terms of the perceived value of their property, or I think most of the time they know? Because I think most property investors I speak to think I got a bad valuation. They always say I got a bad valuation. I always think I get a bad valuation. Yeah.
Look, I mean, when we go out to do a valuation for the bank, we'll be given an estimate, whether that comes from the owner or their finance broker or the banker themselves. But the majority, not the majority, but a large percentage of the time, we feel that what that estimate is, we're pretty close. So, yeah, I think it's in downturn markets, people do struggle to understand that prices have come back. So that's difficult. It's difficult being a valuer in a downturn when we're seeing the beginning of a downturn.
Yeah. So in the city market, you guys, so you look after, I guess, the city market and Queensland. You've seen a downward trend in valuations, mainly around that middle market type properties. Is that, what about the top end? Is there is much of a sort of slide up there?
Interestingly, in the top end, probably that 5 mil plus bracket, the market hasn't come back at all. I think the buyers in that market, they're dealing with their own different economic circumstances. They've obviously got the money there. Since the GFC, there hadn't been a lot of those prestige properties come on the market because the market had come off so much. So I think that market's still pretty strong, doing well. It's really that sort of probably 2 to 5 mil bracket that we've seen a drop off in Sydney.
So the affordable areas of Sydney are still pretty strong, right?
They're still strong.
Markets, yeah. And the point here is that there is definitely markets within markets. There's markets within markets within markets, right? A house on one street is very different from that same house on a street just around the corner. And a lot of people need to keep that in the back of their mind, because you listen to the media or you read the media at the moment and they're talking about, dire circumstances in Sydney. Yes, some parts of Sydney are like that, the new build off the plan stuff, which is oversubscribed or they can't settle. Yes, there is some challenges, but it's still fundamentally a very strong market. So don't get carried away with all this doom and gloom.
Look, as I said, I've been in the industry for 25 years. I've seen it come and go. I think the market now, it's a good time to buy. It's a good time to start looking. So it's definitely not a bust market.
How has doing valuations changed in the last 20 years since you've been in the game?
Oh, it's changed probably significantly, probably in the last 5 years. And I was just talking before to one of your colleagues. We are in an industry that's going through a lot of disruption, and I guess it's because of technology, modelling. So the banks now often will not get a valuation. They'll get a desktop, which will be done by a valuer, or they'll use a valuation model to determine what the property's worth, and in turn that will determine what they'll lend.
Yeah, interesting. And I mentioned really quick self-managed super funds. I'd like to have a drill down on that a little bit. So we're talking about valuations for property investors outside of super, and when do you need a valuation? That's typically when you're looking for some sort of finance event, whether you're looking to buy, looking to sell, looking to refinance, looking to take out equity. How does it work within a self-managed super fund? Do you need to worry about getting your property valued?
Yes, definitely. The ATO have a lot of rules and guidelines around when you need to get a valuation. Primarily, every year you've got to submit your accounts and statements to the ATO for them to determine your tax, and you have to, in those accounts and statements, list the value of your assets.
Okay.
That doesn't necessarily have to be done by a valuer. There are grey areas there, but for peace of mind and certainty, and to ensure that you're ticking off on all the rules with the ATO, we recommend that you get a valuation done.
Proper valuation.
Yeah.
And whose responsibility is it to do that? Is it you as the SMSF trustee, or is it the company or the manager you use to help manage the accountant, whoever? Whose job is it?
Yeah. Well, the company that manages your self-managed super fund, they can come to you and ask you to get a valuation of your asset because they've got to list that in the accounts every year. As I said, it may not necessarily need to be a valuer, but it needs to be a property expert, and the ATO guidelines go into quite a bit of detail there on when it needs to be an independent valuer or a property expert.
Okay, so property expert, you can say, I'm a property expert, I can value my own property, but you're best off getting someone that knows what they're doing.
Well, the interesting thing is that the ATO also refer to valuation rules and how you've got to value property, and you've got to use supportable data and evidence. So whether you're a valuer or not, you've still got to follow valuation principles. So it's a pretty risky business for someone that's not an expert to go and put a value on your property.
And I think this is one of the opportunities and challenges of having an SMSF and putting assets within in your SMSF. And a lot of our listeners think about buying property in their self-managed super fund, and it's getting harder. Westpac and St George, for example, pulled out of SMSF lending this month or last month, I can't remember exactly. But the level of compliance to manage your self-managed super fund is quite rigorous. It's quite time-consuming. And you need to keep compliant. Otherwise, there's penalties, there's fines if you do not. So the idea for a lot of people of having an SMSF is an attractive one because, it's a good way to hold your assets, but there is a lot of baggage that comes along with it. And this has been one of them, isn't it? Valuations.
100%. I mean, this year we were actually at the Self-Managed Super Fund conference, and we spoke to a lot of auditors, and their recommendation is that people get a valuation every year. I mean, obviously, it's an expense.
How much does it cost? Like, what would you charge for a valuation?
For a standard residential valuation for a self-managed super fund, and that's a full report, we would charge around $250 to $300.
Okay.
But there are also products out there. We've got an AMA, which is like a desktop product, and that's under $150.
So you put in all the information about your property, and it does some trickery and tells you how much it's worth, right?
Well, it's actually, the AMA is done by the valuer. Okay. So the valuer that's working in that area on a day-to-day basis. And we've got over 500 valuers around Australia. So everyone's an expert in their particular area. So they'll look at sales evidence, they'll look at mapping, photographic evidence, maybe some details that you've provided, and then they will determine a market estimate based on that data without having to do a physical inspection.
What's the valuers' Christmas party like every year when you get 500 valuers together? What do you guys talk about? Property values?
There's a lot of good stories going around, dog bites and interesting. I mean, we're going into people's houses every day, so yeah.
What's the craziest thing you've seen?
Craziest thing I've seen.
Weirdest thing.
Nastiest thing.
Yeah.
I can't say on here. Yeah.
But you probably get good insight into how people are living, right? You
do. I mean, most people live the same as me. They're proud of their house. They take care of it. So, yeah.
How much is it? And question is, and whenever I've got valuations done on properties and stuff, you want the place to look clean and tidy, and does it really matter that much? Does a valuer see through all that stuff and goes, I don't really care? Like I've been in scenarios where I've done a renovation on a property, so I've met the valuer on site and gone, with a big book of photos going, this is what it used to look like, this is what it is now. Do you just sit and go away, I don't really care? Or can you actually influence a valuer's perception by how you present the property from a cleanliness point of view and also from post-renovation?
Yep. We can see through, if you've got things scattered around the house. Look, we can see through that.
Yeah.
It certainly helps to have the house in reasonable order. Renovations before and after, it will depend on what the bank's requirements are. Usually we have to value the property as is, so it's what we see on the day.
Yeah. Okay.
But presentation, it's important, But, I mean, often you'll turn up to a house and you can hear someone vacuuming and you're knocking on the door and they're not letting you in because they can't hear you. Really, that's just superficial. So,
okay.
Yeah.
So it's the bare bones, it's the nuts and bolts of the property. It's but it's nice for it to be neat and tidy because it's a better experience for the valuer, right?
For me personally, but I mean, really, at the end of the day, we can see through all of that.
So residential property within your SMSF needs to be valued annually in order for it to be compliant?
You need to actually
provide an asset value.
Provide the value annually. There are certain circumstances where the ATO asks you to get a valuation done, and that might be if you're moving into pension mode, you need to get your assets valued in your self-managed super fund. May also be if there's been a major event that may significantly affect the value of your property. So market volatility, you may have done renovations, there may have been a natural disaster, those sort of instances as well, they require you to get a valuation done.
Yeah.
And also if you have in-house assets in your self-managed super fund, you are required to get a valuation.
Okay. And your person that helps you manage your SMSF, whether it's your accountant or some specialist, probably should be across all this for you, right?
They should be.
I know it's like I've got a SMSF. I've set one up. I haven't got any assets sitting in it yet. I'm waiting for the right purchase, but it's a headache, the compliance with it. I'm not an expert on SMSFs. I'd leave it to someone else and tell me what to do, right? So you need to be told what to do by someone.
And you are, and they should be telling you what to do, but it's important too that you're compliant because at the end of the day, you sign off on your accounts, you agree to it. So when it comes to property, if you want to be certain that, you're going to be ticking all the boxes and the ATO aren't going to come and ask questions, you should really be getting a valuation done. Probably the recommendation is every 3 years, unless there's been a significant event.
You might be able to answer this or at least give some observations because I hear horror stories about lack of compliance in self-managed super funds and, where people are actually using someone to help them service it who just don't know the rules, right? It's hard to keep up with the rules. How do you know whether or not the manager you're using or the accountant you're using is doing a good job with your super fund? Is there any sort of red flags?
I mean, if you go to some of the larger managers, you should be safe. But, I mean, you're going to get your accounts audited too every year. So
there's a fallback because someone else is checking them. Yeah.
Yeah. But, I mean, even the auditors,
sometimes
as I said,
the auditors don't get it right.
Yeah. Well, hopefully they do. But as I said, the auditors generally prefer people to get valuations done.
Yeah.
Obviously, though, as I said, it's an expense. So
$250, $300, right? If you're investing through a self-managed super fund, you probably, that's just a cost of doing business.
Yeah.
So,
and if it's every 3 years, it's not a big expense.
Yeah, it's not a big expense. So you spoke briefly about commercial property. So property is valued differently, commercial property versus residential property. Commercial property, i.e. a factory unit or a office floor or a shop or a 7-Eleven or a service station, whatever it is, that gets valued typically from the cash flow it generates versus residential property, which is about sort of the asset value, sort of a slight difference. Can you extrapolate on that for our listeners that might not be too sure?
Well, it depends if the commercial property is tenanted or leased out or if it's owner occupied. But generally, the commercial market, we will consider the income. So we'll look at the capitalisation, the rent over the value of the property. We'll look at the expenses, as I said, land tax, rates, water, all the other bills that go along with a commercial property. And we'll then look at comparable properties and what the yields and cap rates that they are showing, and then make the comparisons of those against the subject property.
Okay.
But then you've got other properties like going concerns, pubs, hotels, caravan parks. They're really very income-based approaches to valuations.
Yeah, and a lot of our listeners are diversifying into commercial property with, a softening property markets in Sydney and Melbourne, which represents a big chunk of Australian property, are looking for opportunities for cash flow in other areas, including commercial. So the rigours of holding commercial property in your self-managed super fund, is it more than residential or it's just different rules to play by, and if you've got the right support, you should be okay.
Well, generally, as I said, if you've got a complex asset in your self-managed super fund, the ATO recommend that you get a valuation done. So obviously commercial is more complex. Also, in-house assets, often you may run a business out of a property that you hold in your self-managed super fund, but obviously it's a related party transaction. In those instances, you need to get valuations done as well.
Yeah. And how do most people choose a value? Is it a recommendation from their SMSF manager or their property strategist, or is it something as an investor you can choose whichever valuer you want to use?
You can choose which valuer you want to use. Often your accountant or your manager will have someone that they've used in the past and refer you to them, but it's up to you who you want to use. You can go online, you can shop around, so it's really up to the individual.
Yeah, and obviously there'll be a cost versus service type scenario. How do you know if your value is good?
Good question.
Yeah.
I mean,
because my view of a great value is someone that gives me great valuation, right? Someone, it might be great value, gives me low valuation. Go, well, you're not a very good valuer, right? So,
well, I mean, someone who's a member of the Australian Property Institute, definitely, there's rules and guidelines that they promote, and we have to follow. They're our main industry body. So, someone who's a member of the API. And in the states of Western Australia and Queensland, you have to actually be registered with the state government. So someone who's a member of the API, the larger firms, we've got PI. Valuation, as you said, is risky. So you want to make sure someone's got their professional indemnity insurance.
So that ensures your company that if a lender says they got me a bad valuation, that you're covered. Pretty much.
That's correct.
Yeah. Okay.
Yeah.
All right.
But not just for the banks, for individuals as well. We've got PI insurance. If we've done something wrong, well,
I'm sure you don't do things wrong.
No, we don't.
So, an independent valuation is important, irrespective of whether you're holding property in self-managed super fund or individually. And I guess outside of your super, it's at a point in time when you need a valuation. It's some sort of equity event of some sort. Do you find people just value their property just to see what their portfolio is worth? Do you get that a lot?
Occasionally.
Yeah.
We also get a lot of valuation requests when people are looking at buying or selling.
Okay.
I mean, obviously you get the real estate agent out and you may get a couple, but people just want that peace of mind, that arm's length opinion. So we often do a lot of valuations prior to sale.
So that's a good point. So you're negotiating for a property as an investor and the real estate agent's telling you it's worth X. Often you don't know whether or not the valuation or the contract price of the property is going to hold up when the bank values it. So you can find yourself in negative territory and they'll only lend you, a lot less money. So you can actually get your own independent valuer to give a valuation of a property before you actually sign a contract to know that, because it's going to give you peace of mind that the valuation that you get prior to purchase should be consistent with the valuation you get subsequent to the purchase when the lender gets valuation.
It should be 100%. And I mean, also in cases of rental assessments, often especially if you're holding a property in your self-managed super fund, you want to make sure that you're getting market rent. And if it's an in-house investment, the ATO expect that the rent that you're paying is market.
Okay.
So not just for valuing the property's actually physical value, but also to determine rental value.
So that's a different valuation. That's saying what rent it should receive every single week or month.
That's
or whatever.
right.
Okay. Is that harder to work that rent out, or is it, because rental markets fluctuate quite rapidly versus capital values. And there's cycles, and we talk about it all the time. But
it is much harder determining a rental value because I guess this, again, it's based on evidence. But evidence of rental income is not readily available to valuers or the general public. So you need to actually have an expert, someone who's in that market all the time. They know what's going on. They know the real estate agents. They've been involved in previous sales, so they know what that market is for the rent.
If you're looking to buy a property and you choose to get your own valuer in to value it, does that annoy real estate agents because they know, It's either going to annoy them or it's going to help make their jobs easier, right? Because they go, okay, this is the established price, right?
Yeah.
It gives you a nice point to negotiate from, I guess.
We've got good relationships with most of the real estate agents. We're out there every day doing valuations. They've got to show us through the properties. In fact, we've got a lot of clients that are real estate agents that actually employ us directly to give them a market value, which they will hold on file, just to give them assurance with the under and over quoting laws, especially in New South Wales. Agents want to make sure that they're doing the right thing by their clients. So they'll hold that valuation on file. It's an independent valuation where the property experts we're, covered. So, real estate agents are pretty good. So.
Okay, that's cool. Sally, I've really enjoyed the chat. Valuation's a very important part of the property buying or the asset management component of property, whether it's inside or outside of super. And I think you've answered a lot of questions that people have been going, oh, okay. I reckon just lean on the experts. And if your SMSF manager or your accountant isn't really having these conversations with you and you're not confident that they are doing their job appropriately, it's probably time to stress test that and make sure you've got the right person on site, particularly in super, about being compliant, because if and when you get audited, you want to make sure everything stacks up. So it's important. Thanks, Sally. I do enjoy it. You do have a passion for property valuations, and I'd like to actually hear some of these stories of doing valuations on the front line, because I reckon they're quite interesting, but maybe not for sharing on a podcast. But that's cool. Thanks, Sally. Thanks for coming in.
Oh, thanks, Phil. It was great.
We report on this sort of stuff all the time on smartpropertyinvestment.com.au, and we'll run a couple of articles around this, no doubt. Deep dive a little bit more into valuations, both in and outside of self-managed super fund. It's one of the part of the mechanics of being a property investor, that you've got to look after this stuff. It might not be the sexy side of buying and growing assets, but compliance, good administration is critical if you want to be a good investor and realise the value of investing in property. If you like social media and that's how you like to find stuff out, you can search Smart Property HQ across all the main platforms. You can like us, follow us, and keep abreast of everything that's happening in property and property investment. If you'd like to get through email, you can subscribe, smartpropertyinvestment.com.au/subscribe. And please keep those reviews coming on iTunes. We do enjoy them. 5 stars, please, if you like what we're doing. And a shout out to anyone who wants to come on the show. We like to mix it up. We go from stuff like this, where we get experts from within the industry to talk about their particular specialisation. Today was valuations, and we have people from right across the spectrum of professionals, from mortgage brokers to buyers agents to accountants to conveyancers to pest and building specialists to property strategists, etc., etc. So if you're one of those guys, get in touch. If you just like to come and share your story about investing in property, please do get connected in with the team, editor at smartpropertyinvestment.com.au. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.